Stay on top of stories about stocks that may impact the market or your portfolio today in Stocks Making News.
Well, since this is the last Stocks Making News segment for 2015, we thought it might be interesting to revisit some of the story stocks that we talked about earlier in the year. As always, Tracy Reinick, Dave Bartosiak here with me to do just that. So, Tracy, the first one that we want to revisit is that Chinese e-commerce company Alibaba. When last we spoke about them, the company stock had fallen way below its IPO price. That was a $25 billion IPO, right?
Yes, huge.
So what's up with them now?
We might have to eat crow on this one, I have to say, because it was hitting new lows when we last talked about it, and it has rebounded off that. Dave's going to talk about the chart, but fundamentals, things have improved as well. They had missed every quarter going into this last quarter, which they finally ended up beating the consensus. So we had a beat there. It was a little bit better last quarter. So the analysts, I brought the chart again of what the analysts have been doing. You can see that the estimates are starting to move higher now. Last time we talked about them, they were on the downward slide because analysts were very nervous about everything going on. Now they've kind of changed their mind. Things are looking better. We're still having the super huge earnings growth for this year and next year, so that's all good. Okay. One thing that I don't like personally, having some things in the news recently, and just a couple days ago, they announced that they took a 27% stake in a big food delivery company in China. It's $1.25 billion investment. I don't like it when companies go outside their main core business, and this is kind of outside their main core business. I mean, they're not a food delivery company. And then they also spent $260 million to buy an English language newspaper in Hong Kong, which actually you cannot access their website in China. So that's a little suspect to me, too.
I find that even more interesting.
Yeah, they're just kind of throwing some money around here. I don't like both of those things, but when you look at just this chart of the earnings estimates, the story looks pretty good.
All right, Dave, what about that stock price?
Well, 0 for 1, Terry. It bounced. Yep. It bounced off the lows, and
we kind of called the low almost.
We almost called the low, right? It bounced off that. If you look at the chart, now it approached 80, kind of 82, 83, 85, somewhere around there.
Yeah.
But it is butting up against resistance here, so I don't want to be the guy who just, the boy crying wolf here. But it's butting up against resistance here. If it can break through, then yes, you're talking about an attack on the 52-week highs. But if it keeps up like it's going now, then I'm still on the bearish side of this. But 0 for 1, Terry.
All right. Let's see here if we move through the list. The second company that we're going to revisit is AT&T. Now, we discussed whether that $63 billion merger with DirecTV would help the company. Has it?
Still a little too early to know. Analysts are still optimistic. The company itself has said they're expecting $2.5 billion in synergy still from that deal. The analysts do like the combination of all their businesses in the United States. I was really excited last time we talked about it about the opportunities in Latin America and specifically in Mexico. The analysts have cooled a little bit on that, but that could still be a surprise in their earnings. Otherwise, as you can see, I put up the earnings estimates going in the right direction. So analysts like that, but you're still only expected to see 5% earnings growth for next year. So it's still, despite this acquisition, kind of the old mainline slow grower with the big dividend. You're still getting 5.5%.
Yeah, is that safe?
Yeah, that's pretty safe. And in this market, given everything that's happening in energy and with dividends over there and some of the big industrials having cut, this isn't a bad play to still be in. I think we said that last time for this dividend. So yeah, the story isn't. We're still waiting. It's going to take a few more quarters to really see what this acquisition is going to do.
Dave, what's your picture look like?
1 for 2, Terry. I said, this is the thing you buy at $32 and you sell it when it hits 38. In the meantime, you're just going to kind of bounce around and collect your, 5+% dividend. It's exactly what we're seeing if you take a look at the chart. We're 34 something, right?
Yeah.
34.95, 35. So it did creep up a little bit, but it's going to move sideways here. Nothing that exciting. Range bound. It's AT&T, but you're going to collect your check and be happy about it.
All right, finally, there's Penney. And when we last talked about them, the company was entering the next phase of their turnaround.
Right.
Have they turned around?
Well, they're going to be stymied a little bit by this holiday season, which actually turned out, everyone believes, to be fairly good for the retailers, but the warm weather in the whole eastern part of the country really put the kibosh on apparel sales, and JCPenney still has a lot of apparel sales. You weren't buying coats, you weren't buying the boots, the sweaters. They're going to have to mark down all of that. So in the short term, this quarter's not going to be so great. But if you look at the fundamentals, they actually have improved since we last talked about JCPenney. They're still going to see a loss for this year. This year's estimate's staying about the same. But next year, we see a loss here of 28 cents. When we last talked about it, it was a loss of 50 cents. So that's significant improvement. The analysts really think that the turnaround is still in play. They're making the progress. Still not profitable, but 2017 is looking a little bit better for the profitability area. And, you know, they're not dead yet.
Are they still on life support?
Well,
would you call
Dave,
it that?
what do you
Dave?
think?
JC Penniless. I said it last time. 2 for 3 this time. Because look at the chart. I mean, the thing's down at $6.84. That's a pretty good slide right there. Everybody thought I was crazy talking garbage about JCPenney, but looks like we were right on that
So
one.
the patient's dead?
See, now it's kind of bouncing off the bottom here a little bit, right? So there may be a faint heartbeat in JCPenney, but I'd still think there are plenty other more attractive places that you could go.
All right, don't remove the oxygen mask just yet, right? Is that what you're saying?
That's what I'm saying.
Thank you both for that. And thank you for being a interested viewer in this segment. We appreciate the feedback that we've received, and we appreciate you looking in on these segments here weekly. And we promise 2016 will hold a lot more interesting story stocks for us to pick apart here with Tracy and Dave. In the meantime, if you want other stock information, don't hesitate to go to Zacks.com because there's a lot of it there, and you can link to it right off the homepage. With Tracy and Dave, I'm Terry Ruffalo.